Despite an underwriting loss in 2020, the U.S. commercial auto insurance market experienced results that were the best it has seen in several years across a number of key metrics. I'm John Weber for AM Best TV. Here to discuss the market is Joni Cerbone, Senior Financial Analyst at AM Best. And Joni, do you expect future results to continue to improve, or is there still a lot of work to be done?
Thanks, John. That's a great question. I really think the answer is that we need to wait and see. Insurers in the commercial auto line have really done a lot of work to try to improve profitability through several years of consecutive rate increases and corrective underwriting actions. 2020, as you know, was a unique year in many ways, so it's really difficult to determine if the changes the industry have made in the previous years have really made a difference, or if 2020 was really just an anomaly. The line saw a significant improvement in 2020. Although the industry still reported an underwriting loss, underwriting results for commercial auto were the best they have seen in several years, which was primarily due to the reduced frequency due to the pandemic and the related stay-at-home orders, business closures, less miles driven, etc. This reduction in travel and accident frequency was partially offset by an uptick in claim severity. So with traffic patterns returning to pre-pandemic levels, claims frequency will likely return to more historically normal levels as well, which really puts into question whether the improved results for 2020 will really be able to be sustainable beyond the pandemic.
You know, Joni, we hear a lot about social inflation. Do you think social inflation has affected the commercial auto line?
Social inflation has definitely affected commercial auto. It has been one of the key factors which has negatively affected commercial auto results and is also increasingly affecting other casualty lines as well. Over the past several years, we've seen more attorney involvement in the claims process in the transportation sector. In addition, over the last decade, plaintiff awards in the commercial trucking industry have increased dramatically, both in number and size. So social inflation particularly affects businesses perceived as having deep pockets. So the insurance lines that have been most affected are commercial auto, along with professional liability, product liability, and also directors and officers liability.
Now, AM Best composite of commercial auto specialists has recorded better results than their property casualty peers. What do you think they're doing differently?
Well, this is an interesting question. So the rating process that we go through here at AM Best allows us to get a much closer look at these companies to see how these commercial auto specialists are generating better results than their P&C peers. One thing that we see is loss sharing among policyholders and insurers. These underwriters typically have relationships with their policyholders that go beyond the straight deductible, self-insured retention financial arrangement. Many captives with trucking exposures, risk retention groups, and also strong commercial underwriters with a dedicated focus on the line of coverage have policyholders that partner with them to mitigate risk. These niche writers can really charge a more accurate premium and accept risks for owners and businesses that they work very closely with and truly understand.
Joni, do you think commercial auto insurers may see some benefit from newer trends stemming from the pandemic, such as driver shortages or hybrid work schedules?
We'll see. Commercial auto insurers may see some benefit from hybrid work schedules, as that means less overall cars on the road, so potentially less frequency. However, as we have also seen in 2020, less drivers on the road potentially equates to faster driving and greater severity in claims. Driver shortages may actually be a hurdle for commercial auto writers. Because of driver shortages, some businesses may lower their driver applicant standards to fill these vacancies, which may result in hiring less experienced drivers who lack training, which in the long run may increase the likelihood of accidents and claims of negligent hiring, which could result in, higher settlement costs and jury awards. Driver shortages could also result in experienced drivers working longer hours, which can lead to driver fatigue and higher risk of accidents due to other attentiveness.
Thanks, Joni.
Thank you, John.
That was Joni Cerbone, Senior Financial Analyst at AM Best. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.